Nigeria is Africa's biggest economy, but does that mean prosperity for all? Today, we'll break down how wealth and income are shared in this country, who is rich, who is not, and what the numbers really say. So by the end of this video, you will know where you stand in these dynamics, and you will also know how to climb these stairs so you will change your position. No Baba Ijebu, no Bet Naija, and definitely not walking your life away 24/7. So you must have noticed that I do not have my thinking cap on today. So today I'm going to be doing this video without my thinking cap on, so kindly bear with me. We shall break our analysis down into three core aspects. One, we shall take a reality check. Now let us look at some realities that seems to be the foundation to these disparities in wealth distribution in Nigeria. So we look at our income, right? You look at your income. Income is money you earn. It tells what comes into your coffers, which includes salaries and wages, bonuses and commissions, interest income, that is income and dividends. So for example, if you make 200,000 naira from your job, then 50,000 naira from side businesses that you engage in, what we call side hustles, then your total income for that month is 250,000 naira. Then the second reality check that we look into is your net worth. Net worth can be interchanged with wealth. This is what you actually own after subtracting what you owe, like your assets, your cash, investments, and retirement accounts are what you own. Then you subtract what you owe, like probably loans, and if you are in a mortgage scheme, mortgages, etc. For example, if your home value is say 50 million naira and you have a mortgage of 30 million naira, then your equity for that home is 20 million naira. After adding savings and investment, what you will have is your net worth. So please don't mix up income with your net worth. They mean totally different things. Income tells you what is coming in, while net worth is what you have kept and has grown over time. If income or wealth is uneven, then a small group may have most of the power and resources, while many struggle for basics. Two people may be earning the same income, but that doesn't put them in the same network tiers. They may be in different network tiers depending on how they use their income. According to a data from Oxfam, the bottom 50% make below 200,000 naira per month, while 25% make around 500,000 naira monthly. The top 10% make about 1 million naira monthly, while the top 5% make above 2 million naira monthly. Only 1% makes 5 million naira and above monthly. Just so you know, all these figures are before tax and they are household income, that is by couples. Also, about the network distribution in the country, bottom 50%, which is the median, have a net worth of 1 million naira and below. So that means half of the population of this country have this network, with a lot of people at the bottom having a negative net worth, meaning they are living on aid from family and friends, and that is how they get by. So they have a negative net worth. The top 25 has 10 million naira in net worth. At this level, 75% cannot enter this boat. So only 10% has a net worth of 50 million naira in this country. So at this level, 90% of Nigeria does not have this, right? This is where wealth starts to separate. The top 5% have 100 million naira in net worth. Only about 5% has more than this net worth in the whole country. The top 1% is the ultra wealthy. They have above 300 million naira in net worth. This means that less than 1 in every 100 households has this net worth. And mind you, this is household net worth and not individual. So age also should be a factor to consider in this mix. No one expects a young professional to be in the top echelon of this chart. So you may want to consider how you assess yourself in this categorization. To put this into context with data, we use a concept called Gini coefficient. Nigeria's income inequality, measured by the Gini coefficient, was about 35% in 2025. A higher number means more inequality. So if the Gini score was 0%, everyone in Nigeria would earn the same income, but at about 40% this year, wealth is unevenly shared. So the more the Gini coefficient, the more it is that wealth is unevenly distributed in this country. Since we have looked at the numbers, now let us look at the patterns underneath the numbers. This is where things start getting interesting. So the number one pattern we'll look at is wealth is extremely concentrated at the top. So the top 10% household in Nigeria earn about 5 times more than the median household, right? Then compared to household near the bottom, they make 10 times as much. That is how wealth is unevenly distributed in this country. The inequality is not subtle at all. It is massive. This explains why two people can work their entire life earning salaries and still find themselves in different places in the financial world. According to Business Day Nigeria publication, almost 1/3 wealth in Nigeria is owned by the top 1%, and that is 32% of Nigeria's wealth. Also, the top 10% controls 60% of Nigeria's wealth. Meanwhile, the bottom 50% controls only 4% of Nigeria's wealth. So you see the huge gap between the top and the bottom. So another pattern that we look at is not only is it that there is huge gap between the rich and the poor. Data shows that this gap is unevenly getting stretched because the wealth of the top continues to grow. In the last 20 years, the wealth of the top 10% increased by 5%, and the wealth of the bottom 50% declined by 3%. So you can see that the rich keeps getting richer while the poor are still sliding down into further poverty. So the third pattern we shall look at is different wealth group holds different types of assets. If you can relate to any of this and you are getting value from this video, please hit that subscribe button now, and don't forget to like and share this video with that person you know that needs to see this. So now let's get back to the video. So for the bottom 50%, what they own are everyday appliances like consumer durable goods, for example, home appliances, electronics, furniture, etc. As for the middle class 25%, what they own are also some consumer goods and some upgraded appliances and gadgets. They own like electronics, they own cars, they own furniture, and maybe some retirement entitlements as well. The top 10% holds real assets, right? Like they own stocks, they own real estate, they also participate in small businesses and as well as mutual funds. Then the top 1%, most of their assets are in stocks, mutual funds, corporate business, real estate, and some monopolistic businesses that a lot of people don't have the ability to invest in. You should know that all asset class does not grow at the same rate. Physical asset does not grow very fast in value compared to financial assets. So examples of financial assets are stocks, you have mutual funds, you have bonds, and other financial monetary instruments. Financial assets tends to grow quite rapidly and it compounds over a long period of time, while physical assets grows as well, but it does not have that rapid growth tendency like your real estate, like investment on machineries and all of such. So the third category we'll look at, having seen the patterns, we shall look at practical ways you can move up these wealth tiers. Number one, you have to rebalance your asset growth, right? You have to find the balance between stability and growth on your assets. You get stability by investing in your home, like your house that you live in, right? You also get stability from gold investment as well as bond, etc. While growth assets include stocks, exchange traded fund, mutual funds, or small business investments. Those are growth assets. So you have to find a way to balance these categories of investment. So number two, you have to stay invested even during downturns in the market. Keep putting money in your investment even in bear markets. During crisis, this is when the opportunity is massive to build wealth in the stock market. This is when you should apply the strategy of cost averaging. Even if the price of the stock that you hold is going down, this is the opportunity for you to keep accumulating more shares of that stock in as much as you know that the fundamentals are intact, right? You cost average into that stock and build a better position. So the third means you can upgrade your level in the wealth distribution in this country is to upgrade your skills, right? Investing in yourself is a great investment that will compound just the way money does. And no one can ever take that away from you. You can learn more skills to scale your present job. That is, learning automation or incorporating AI on your activities, on your present work activities. For example, if you are a teacher, you can learn how to use AI tools to work remotely and to deliver your product to thousands of people. This will increase your reach and it will also increase your pay. So the fourth way you scale your level is by turning your income into real wealth. You have to be able to deploy your income into accumulating real wealth. This is by converting your income into assets by deploying a portion of your income to investment consistently. A high income does not necessarily mean a high net worth, but by adopting smart financial planning, your assets will grow. You can easily just adopt automation into your budgeting process so that whenever you get paid your salary, a particular amount will go into your investment account or your brokerage account. I believe you now know the wealth distribution in this country, and also you have assessed where you fall in this chart and the steps to take to upgrade your level in wealth. So please hit that like button and share this video with people in your circle that don't know this. As I always say, wealth is not by luck, it is built by information followed with execution. So if you found this video interesting, kindly check out this one over here. You'll like it too. Peace.